What if turning just $70 into over $3,000 was actually possible, not with luck, but with deep data analysis, specifically data that tracks the trades of wealthy investors and possibly even insiders? In this video, we're going to show you how we found this 5,400% profit trade early and how we knew it was likely going to be another winning trade. And so on this day, May 28th, before the stock made these big moves recently, gaining about 228%, we detected and analyzed unusual option activity on MP Materials stock, ticker symbol MP, and we emailed our members about this unusual trade. As you can see here, this was the email we sent to members, alerting them of unusual option activity detected on May 28th. And so we analyzed MP and went long bullish when the stock was trading at $19.60 per share. Now it's trading at $63.22 per share. That's over 3 times higher. And so what just sent the stock soaring? Well, last week, the company announced a major deal with the US Department of Defense, and the stock jumped more than 45%, the biggest one-day percentage gain on record. And that's not all, because this week, the stock rips 20% higher after announcing another deal, this time with Apple. But here's the thing, a wealthy investor was already positioned in this trade, and so were we, along with our members. This is why we track and analyze unusual option activity to follow the data of smart money before the news even breaks. Did someone know something early? Did an insider leak the deals? We may never know for sure, but here's what we do know. Our data analysis picked up on it early, before these deals with Apple and the US government went public. So if you want to start getting access to some of these profitable opportunities, sign up for our free newsletter on our website. We'll put a link up here. And if you want full access to all of our trade alerts, including real-time updates, detailed analysis, and earlier entries, consider joining the membership. You'll get direct access to the trades of wealthy investors and potential insiders, so you can see what the smart money is doing before the trade becomes highly profitable. And that's exactly what happened here. That's why we entered this trade, specifically the July 18 options at the 25 strike calls, because a wealthy investor bought 36,000 contracts at a price of 70 each. Since options prices are shown here, and each options contract controls 100 shares of stock, to get the dollar value, we either multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $70. And now that these July 18 options have expired today, let's take a look at how much they're worth. As we can see here on the option chain, these contracts are currently worth between a bid price of $3,780 to the ask price of $3,930. And remember, these options were only going for a price of $70 each when we entered this trade. That's why our trade is extremely profitable. And so, how much profit is this in percentage terms? Well, let's take a look at our analysis when we entered this trade using the risk profile graph, where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already factors in the cost of the trade. That's why you can see that if the stock had dropped, it would have been a negative $70 loss per contract. But since it went up to about $63 per share, we have a profit of $3,780 per contract. And so to calculate the profit percentage, we take $3,780 divided by the initial cost of $70 and then multiply by 100 to express it as a percentage, and that gives us a return of 5,400% profit. In other words, we made 54 times our original investment on this trade. Not 3x, not even 10x, but 54x. Just one of these winning trades at 54x can offset more losing trades and drive long-term growth, making a significant impact on our overall net profitability. What we mean by that is that we could lose 53 trades in a row at 100% loss each, totaling 5,300% loss, and still be up positive by 100% because of this 5,400% gain. Now, if you've been following our channel, you know that we do not lose that many times in a row. More like the opposite, because we win a lot more trades. But the point is, even though many people focus on the win-loss ratio, or how many winning trades versus losing trades, the real key lies in how much you can gain when you do win. A high win rate does not necessarily translate into higher overall profits if each winning trade yields only a small return. Instead, focusing on maximizing gains in winning trades can have a more significant impact on your bottom line, even if you have occasional losses. And yes, some unusual trades do result in losses. That's the reality of trading. It's why we diversify with stock picks made by wealthy investors and manage risk carefully through proper position sizing. You do not always need a large position to generate big returns. Like in this case, a small position size of $70 turned into over $3,000. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information that help them make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, if you want to get access to deep insights like this, head over to our website. We'll put a link up here where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, speaking of the rich, did this wealthy investor close their trade position? To find out, let's dive deeper into this trade on the option chain for these July 18 options at the 25 strike calls. As you can see, there are still 29,000 open contracts showing in the open interest. This tells us that this wealthy investor did not close out most of their positions. They're still in the trade. And that is why you can still see our position here. POS stands for our position, and the green color indicates a buy position. This data is important to track because it can help us decide whether to stay in a trade or close out. With that being said, we do not rely on this data alone to time our exits. We go deeper, analyzing multiple variables and other data sets. That's because wealthy investors often hesitate to close positions, as realizing profits can trigger higher taxes. And even if they do close their option positions, they may have simply taken assignment of shares, meaning they're still in the trade, just using stock instead of options. For example, since these $25 strike call options are deep in the money and they expire today, July 18th, each contract will result in the assignment of 100 shares at $25 per share, a total cost of $2,500 per contract. This means we'd still hold a long bullish position in the form of 100 shares of the underlying stock. Unless, of course, we choose to sell those 100 shares at the market price of $63.22 per share, which would generate a total of $6,322. And so when we subtract the cost of $2,500, this would result in a net gain of approximately $3,822 per contract. And that's how this $70 trade turned into over $3,000. If you want to learn more about the strategies that give us an extra edge beyond just picking the best stocks, then head over to our website. We'll link it over here so you can find high potential opportunities just like our 5,400% profit trade on MP Materials. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.